YieldMax is a name that's been getting so much attention over the last year. One look at their ETF list will show you why there is so much hype behind them. Look at those distribution rates: 70%, 40%, 55%. It's hard to ignore them, right? Specifically, there's been one ETF with a very long name, the MicroStrategy Option Income Strategy ETF with a ticker of MSTY. This has become super popular with income investors who are open to take a risk. Just look at that nice shiny page, the triple-digit distribution rate. How can you not get excited, right? One look at its total return chart is all you need to see why some people are getting so ecstatic about it. How can they not? 230% in 11 months. Why isn't everyone putting their money there? Well, some words of caution: it's not all sunshine and rainbows. There is a lot of uncertainty with MSTY and some serious risks that everyone needs to consider before investing. But let's first start off from the positive, optimistic side. First off, the cool thing about MSTY is that it brings two totally polar opposites, crypto and passive income, together. A lot of income investors specifically avoid crypto because it's volatile, it's risky, it's a scam, it's unregulated, a pyramid scheme, online casino, that type of thing. Basically, they don't trust it. And more importantly, crypto does not generate any cash flows. And obviously, it doesn't pay any dividends or income. Now, I'm generalizing here because there are ways to make income from crypto. But the bottom line is income investors are usually more conservative, more risk averse, and avoid crypto. Period. However, YieldMax came up with a way to make a passive income from crypto with their MSTY ETF. And bear with me, this will make sense in a bit. Before we start, I also want to emphasize I do not own this ETF. In fact, I cannot actually own it because I live in Europe and it's an American ETF without a UCITS equivalent. So what you're seeing here is the observation and research of an objective spectator. Now, what does MSTY actually do? Basically, this YieldMax ETF actively sells out-of-the-money covered call options on MicroStrategy, or MSTR. I know that sounds super complicated, but the idea is pretty simple. An option is the right to buy a stock at a certain price, called the strike price. Out of the money just means that it is at a price above the current. So, if MicroStrategy is trading at $100, an out-of-the-money option would be at $110. Finally, covered means that you own the stock for which you are selling the option. The alternative is a naked or uncovered call option, in which case you would not own the stock. Now, the way you make money by selling call options is through the fee you receive for selling that option, for selling the right for other people to buy the stock from you at a certain price. The way options are priced is that the more volatile a stock is, and volatile just means that it goes up or down by a lot very quickly, the higher the premium you can get from selling that option. That's it. That's all there is to it. When you take a stock like MicroStrategy, which is extremely volatile, a covered call strategy can quickly become a cash cow if executed right. That's why MSTY has such a massive distribution rate. Right now, it is 109.37%. You have to admit, that is pretty impressive. Still, what does this have to do with crypto? Well, MicroStrategy, stock ticker MSTR, is Michael Saylor's company, which is currently famous for heavily investing in crypto. Technically, the company does some business intelligence and analytics, but I'm not gonna go into it, because what MicroStrategy is famous for is Bitcoin. They bought a lot of Bitcoin and they continue to buy a lot of Bitcoin. So investors buy MSTR, MicroStrategy, to bet on Bitcoin. Because of the depth that MicroStrategy has taken out to buy Bitcoin, whenever Bitcoin's price goes up or down, MicroStrategy, MSTR's price often goes the same way, but by a lot more, which means that there's a lot of volatility there, like I was saying previously. So, by selling call options for MicroStrategy, this YieldMax ETF takes advantage of the volatility and makes a lot of dollars, which it then pays to its shareholders. Essentially, if you buy MSTY, you get exposure to Bitcoin's volatility and you can make a lot of cash without having to know if Bitcoin will go up or down in price and without actually owning any Bitcoin. Sounds amazing, right? How can people even be skeptical about this? In theory, it is a pretty good idea, but reality is a bit more complicated. First of all, MSTY is not a set and forget type of investment. There are risks associated with its strategy, like the potential collapse of MSTR if Bitcoin's value declines significantly. The ETF started a year ago at the beginning of this Bitcoin bull run, so we haven't seen what's gonna happen if Bitcoin prices crash massively. Also, unpredictable, rapid price swings can turn out to be problematic for MSTY's option strategy. Options are a quick way to make money, and a quick way to lose money. Given the active management of it, it really depends on the fund manager to execute the strategy well. A few bad decisions can destroy a lot of value and a lot of your money. Plus, the fund fee is 1%, which is pretty expensive for a fund. Finally, despite MSTY having a total return of 231% over the last year, you could have made at least half as much, 370%, by just owning MicroStrategy instead. That's the biggest trade-off of this covered call strategy. You are basically limiting your capital gains so you can make an extra buck on the side with options. In some cases it works well, but as we can see here, the difference is really massive. Not to mention that all of these distributions that MSTY makes are taxable events, meaning you're gonna have to pay a tax on that unless it's in a tax-exempt wrapper, and that will decrease the total return on your investment in MSTY. So, like you see, there is a lot to think about before buying it, even though I have to admit that getting such a massive return paid out monthly is very attractive. Having said all of this, there is a time and a place for ETFs like MSTY. I can see why people are interested. If you're inclined to take a risk, it could be worth putting 1 or 2% of your portfolio in MSTY or one of its sister ETFs from YieldMax. However, I personally would never ever put more than 2% in a fund like that, unless I'm trying to get some sort of an adrenaline rush. But, you know, each to their own. So, what do you think about MSTY or YieldMax? Are you a believer or are you a skeptic? Let me know in the comments below. Thanks for watching and I'll see you again in the next video.